I'm Eric Salzman, joined by Kevin Doherty. How are you guys?
Hello.
Hey guys.
So, Kevin, give us a quick weather update in Berlin.
Oof, it's so it just ticked up to 102 degrees. So
Are you in an
we're
air
not used to
conditioned
that.
are you in an air conditioned environment right now?
I am not.
There we go.
We do not have air conditioning. I have a fan.
That's good.
I have a glass of water here. And when we finish taping, it's 4:30 in the afternoon. When we finish taping, I'm going to go pour myself a very large uh, icy adult beverage
There we go.
and to deal with the heat.
Is there like a pool or some kind of water nearby you can jump in or not?
No, there isn't. There's a shower. I can take a cold shower, but there is a river that you can go swimming in, but I bet it is absolutely jam packed, and just the journey to and from would be very hot and very miserable. So I'm going to stick with the fan and
The
maybe
beverage
yeah, scotch on the rocks
and the
and
shower.
turn on
That,
Netflix and take a shower.
now, the old days, right? You get a block of ice and you put it in front of the fan. At least you could, get the old air
Yeah.
conditioning.
Yeah, yeah.
Good luck
I
finding
can
a
sold
block of
out.
ice.
I'm gonna try and avoid that. I'm gonna try and be a man about it.
All
There we
right. Well, speaking of being a man, so
Mm.
Kevin, the first podcast we did in June, I think it was June 6th, you brought to everybody's attention, before really anybody was talking about it, that things were going awry at Michael Saylor's strategy,
Mm.
formerly MicroStrategy. And you specifically talked about this preferred issuance called Stretch. There's 15 billion of it. You highlighted that. And I think at the time, Stretch was trading at about 96. I think it was enough of a discount because, as we'll get into it if we repeat it again, is that this was viewed as like a money market instrument, really never supposed to break through par, blah blah
Right.
blah. And you put out the warning on that, and we closed yesterday at 74. And
Yeah.
now it seems like stuff's unraveling. So let's get right into that. Give us an update.
Yeah. So there's two crypto things. We'll start with the bad news and then I'll end with something a little more positive, hopefully. But yeah, this was another really rough week for Stretch. And I'm sure there's a pun in there somewhere. I'm too hot to think of one right now. But if you guys do jump in. But yeah, it traded down on big volume basically from Monday. It closed slightly up Monday and then was down Tuesday, down Wednesday, down Thursday, down Friday.
Mhm.
And roughly 25% of the outstanding Stretch traded this week. So again, as we talked about before, it looks like there is a like just forced liquidations and same pattern. There heavy volumes right on the open in the morning, which again is another indication of some forced sellers coming in to the market. So next week is, I think, going to be pretty critical. There's a couple of things that make it that way. One is remember this pays dividends on a monthly basis. Starting in July, it'll be a bi-monthly basis. So the 30th is what, Tuesday? Tuesday the 30th
Yeah.
would be they would announce the dividend that they're going to pay, and it based on um, the policies that they've announced before, they should also be hiking the dividend that they pay, which is currently 11.5%, by at least 0.5% and possibly as much as 1%. And they would make that announcement on June 30th. So the dividend would go from 11.5% to 12% or 12.5%. And that's on par. If you buy it
Yeah,
right
and Kevin, let
now,
me just to interrupt you for a second. That
yeah,
right now, with a dollar price of about 74, that implies a dividend rate of about 15 and a half.
yes, it does. Exactly.
They ain't
Uh,
doing that. Yeah, it's
no,
like, or if you looked at it as if this was like a corporate bond, a floating rate corporate bond, it's SOFR plus about 1,150, 1,150, which is like triple I don't even know if that, I think that's like a C or even C minus or something like that, or if they were,
Yeah,
if they were, if they were being rated.
it's implying deep distress. And so the so that'll be one of the key things people are going to watch is what happens with the dividend policy. The other thing is that every Monday, um, assuming that there was activity in the week, MicroStrategy, just like any other company, would file SEC Form 8K, which details here's what we did. And so when they make additional Bitcoin purchases or in the past, additional strategy, so STR, sorry, stretch, so STRC issuance, or if they sold MSTR into the market to raise cash or buy Bitcoin, all that gets detailed on Monday. And
Mm.
so with this week being so brutal and with people really starting to wonder, are they going to be able to keep their promises? This is a big week. I mean, it's 74.57. It basically to return to par would imply a gain of 33%. So forget about for now, the 11.5% yield annualized, or even the 15.5% annualized yield that you could buy it at now. I really think this thing's either going to return to par or it's not. And return to par gives you a 33% capital gain. So there's an interesting story here. I'll say one final thing here. Um, June 30th is important for the dividend date and the dividend policy. I think it could also be important because this is the end of the quarter and the end of the first half of the year. And as you know, funds, hedge funds, mutual funds, other funds, they have to do reportings at the end of quarters or at the end of a half year detailing what their holdings are. And we've seen this before in other, if a stock gets into trouble and there's a lot of bad news around it and the sentiment turns really negative. If you're a fund manager and you hold this in your portfolio, there's a lot of incentive for you just to say, call your trader, call your analyst, first of all, and say, what the hell's going on here? And even if the analyst says, hey, don't worry, everything's going to be fine, it's going to trade back up to par. Uh, this fund manager doesn't want to deal with all the hassle that comes from his investors or Bloomberg or the Financial Times calling him up and saying, "Hey, we see it, in your filing, you're a holder of Stretch. Do you want to comment on the problems it's having?" So they call their trader and say, "Just dump it. I don't give a shit. Get me out of this thing. I don't want to have to report in 3 days that I own it."
Kevin,
So
just to interrupt you for a second. So we've been doing we at Monkey Business have been doing quite a bit of research here and to see
yeah.
if Mr. Saylor has committed fraud.
Mhm.
But one thing that we looked at was we looked at the holdings, and BlackRock owns a big chunk of this. One of the big preferred stock ETFs, PFF, they own 3.5% of Stretch. Empower, which is a big retirement, they're a 401k retirement manager, and I hope I phrased that right. And they make pre-mixed portfolios. So when you get your 401k and it empowers your administrator. You can't buy individual stocks and stuff. You basically buy the funds they offer you. And a lot of times, if you don't pick something, they default to this pre-mixed portfolio. Well, it turns out Empower has a decent amount of this of Stretch in there as well. So um, when you see that, the ball game changes from which is bad enough. Retail investors got duped by by Michael Saylor and saying it's a bank deposit, blah blah blah. But when you start dealing with professional investors, professional managers, those guys and gals need to read the prospectus. And if they read the prospectus, which they should have, they would have noticed this is this is a Ponzi scheme. In other words, this is not something I
Well,
want to be involved with. Well, you know what I'm saying? Like, whatever the case, you're right. Maybe it's not that extreme, but I could certainly see an ERISA case, basically as far as people managing retirement money, just abrogate, their fiduciary responsibility. They just abrogated it because they didn't read. They obviously didn't know enough about this. This could have happened. So
mhm.
now is that 100% true? I don't know, but I could see lots of legal things happening with regards to this.
yeah. Now, Kevin, just to like, it's kind of been an orderly drop of the ticker MSTR, which is the strategy company, right? That's their ticker.
Right.
The stock's at like $80, I think, right? Now
Yeah.
that thing was at like 200 and something at
It
one
was
point.
140 like 3 weeks ago.
Yeah. But all this put this all together, like I don't want to like cause a panic or, but like why isn't this thing at like 20 or 10 or 5? Like it sounds to me like in the next 2 days, big stuff has to happen or they're really in the crapper, right? Like really. Like and what happens then when they're like, yeah, we don't have the dough, right? Because that's something you said before too, right, Kevin? Like you figured they had like maybe 4 months of cash flow.
7 months.
7 months. Okay.
Yeah.
So that
So
had to
Richie,
be part of it.
they raised cash, and I think that Kevin, correct me if I'm, but I saw when MSTR, which is the common stock of strategy, started taking the dive and taking stretch down with it, was when it came out that they issued another 335 million of MSTR, the common, where they used to buy, as they used to buy Bitcoin. This time they only bought 30 million of Bitcoin, and they took $300 million of diluting MSTR, took $300 million of that and put it as add to the cash reserve for
Yeah.
the preferred, which
Yeah.
I think I saw that. I'm like, MSTR and this stretch is going to get divorced from the value of Bitcoin. Like now, it could be like Richie said, it's just an indictment on, all right, that their strategy is finished. They can't do what they were doing before. They're trading at a huge Are they trading at a huge discount now to Bitcoin?
It's about they're trading at like 85 to 90. So it's not that big of a discount right now, but it is a discount. And I think it was actually smart to raise the cash reserve. We talked about this before. The colossally stupid thing they did is they raised a bunch of cash. Now it's 3, 4 months ago, and used it to retire a convertible bond, a zero coupon convertible bond that wasn't due until 2028. And and they'd spent $1.3 billion doing that. There was no reason to do that, none whatsoever. And it was a terrible use of capital because it locked in a return of something. I mean, they bought it at a discount, but it only gave them an annual return of like 8%. So they were saying, we're going to put a $1.3 billion of cash and use it to generate an 8% annualized yield. It's like, wait, what the hell? You're telling everybody that Bitcoin is, it's worth paying out 11% on a preferred in order to finance a Bitcoin purchase because we think it's going to return a lot more than 11% per year. But you just retired a convertible that you're returning less than that. It was a really, really stupid move. And that's when all this trouble started. So
Yeah.
look, in my humble opinion, I think he should just sit on his hands and do nothing. I think he should, frankly, put some of his own personal money into this and come out and say, I'm buying with my own PA. He owns actually 10% of Class B so Class B shares that are equivalent to 10% of the capital of MSTR overall. So look, if he really believes in this, he should go out to a bank and say, I'm pledging my Class B shares as collateral. Give me a big loan, $1 billion, and then announce to the market, I'm buying MSTR Class A stock and I'm buying Stretch. Like, you all are misreading this. It's not a Ponzi scheme. We've got plenty of cover. I believe in Bitcoin. This is a temporary market panic. And to prove it, I'm putting my money up to show it. And the problem is he's just been doing one stupid thing after another that has really damaged his credibility with the markets. And I think he should do one of two things. The ideal thing would be the strategy I just announced. The second ideal thing was just to do nothing. Stop doing something every goddamn week. Let things just kind of cool down.
Yeah, I mean, I think that I think you're right. I mean, I think that eventually MicroStrategy goes from being a verdict on the whole company two, at some point, there's a real asset there, right? It's not like his last go around where, there was nothing. I mean, at the end of the day, it was .com bullshit BS.
This is a
Like there's
leverage
a
bet on
real
Bitcoin in
asset
both
sitting there.
directions.
Right.
Yeah.
So the vultures will come in at some point if it keeps dropping and be like, look, I'll take that stock at 70 or 60 and I'll buy this cumulative preferred I'll do all that because I believe in Bitcoin and I believe that it's worth $52 billion of what he owns and it's not going to zero. It's not going, hopefully.
I think this is going to be a big week. As I said, the strategy is, or sorry, stretch. As you said, it's at 74.5 right now. It's not going to stay there. It's either going to go way up or way down from here. And I think this week could be the week that does it. So, but I did promise also some good news from crypto. This actually happened not this past week, but the week before. We didn't get to it on the show last week because of all the other stuff that was going on. But Japan passed a new tax rate. Their parliament passed a law for new tax treatment for cryptocurrency, where before the capital gains tax on crypto was the same as your marginal tax rate. So like your income tax rate. Whereas other assets in Japan have a fixed 20% capital gains tax rate. So what that means is that crypto was heavily taxed more than other assets like stocks and bonds. That's changing now. So they have lowered and put crypto into the same category as other assets like equities or fixed income. So its capital gains tax effectively goes from 55% to 20%. Why is that important? Well, Japanese savers and investors, because of this different tax treatment, have basically forever in the history of cryptocurrency owned less of it as a percentage of their assets versus other people like Americans, Koreans, Chinese that don't have this tax disadvantage to owning crypto. And the Japanese savers, that's the second biggest pool of capital in the world. So this is not something that's going to change overnight, but if you see over the next few years, in America we call the average Rich calls the average investor J.S. Ragman, but whereas we would say Mr. Jones or Mr. Smith, in Japan that investor is called Mrs. Watanabe. So on Wall Street, what is Mrs. Watanabe doing? Is she buying the dollar? Is she selling the dollar? What's she doing? If she starts buying Bitcoin, even just in little bits, that could be something that the market is not currently pricing in. So
maybe
we get accused of being too pessimistic. There's a cause for optimism.
Well, should we start legging into some Bitcoin? I just do it through the BlackRock ETF. It's at 30p now.
I've legged in so far that there's a leg halfway up my backside. So you can.
You got 4 legs in there.
Yeah, exactly.
All right. Good stuff. And now to continue our victory laps and patting ourselves on the back, Richie, you talked a lot about a couple of weeks ago we were talking about AI spending, and we even before that we were talking about how these are the guys right now, but A, they have to prove that they can make money, and B, who's going to be the leader, and really, can all of this AI spending from corporate America continue to do it where they're paying the top large language model, the chatbot, whether it's Chat GPT or whether it's Claude or whether it's Gemini or whether it's Elon's one, the very expensive AI that they've been buying, the tokens, the intelligence tokens, do they all really need to be buying those high-end tokens when they could either go to DeepSeek or one of these other guys? And I think you said that 6 months ago, like these fellows over in China who cost about half of what you cost, and you know what, they do about 95% of what you can do, and for most people that's going to be enough. So anyway, that I think now that's become a very big story, certainly in the month of June, that corporations are saying, "Whoa, we already blew through our budget, and I'm not seeing it." And that went from firms basically telling people to use AI or you're fired, to what, don't use so much AI, it costs too much. And you had a very interesting story about a very big company, Richie, that you saw recently.
Yeah, so there was a headline, I forget where I saw it, but we were talking about it before. It said, and I didn't read it, but I know what they meant. And it said, Apple does have a budget. So if people paid attention today, and they didn't have to, or yesterday, but you will soon when you go to buy your new iPhone or iPad or whatever, you're going to be like, why are they costing so much? This one, geez, inflation. So Apple, of course, blamed the chips and the like, the memory, all that stuff has been rising, rising, rising. So the biggest performers this year have been the memory chips. Not so much like the Mag 7, right? The Mag 7 is down 13% in June, I think it is. Something, it's like the worst month for the Mag 7 in years. And when you have companies like Micron, SanDisk, AMAT, AMD, they're like flying, like flying. And Micron had like insane earnings earlier this week. And that news came out the next day about Apple, and Micron got hit, like, because people are drawing lines now saying, well, geez, just like Eric was saying, like, if Apple says no mas, bro, like we're done, can't do it, Pally, can't do it, and they get hit because Apple stock got hit because people are going to balk it. They may do the old, I don't want a new iPhone if it's going to be that much, right? I'll pass. I don't need the newest gadget. And Apple will have an uncomfortable conversation with some of their memory chip people. Like, bro, if you want us to buy anything ever again, you need to cut your costs. Also, as a side note, there is something called HBM. I think it's so HBM is I forget what the B is, the bit, M is for memory. Somebody else just came out and said they're working like feverishly on something called HMC, which is memory compute, or sorry, bit compute, HBC. So the idea there is they're looking at Micron, they're looking at SanDisk, and they're like, they got us by the balls. Like we are hosed. Where else are we going to go? And that's why these companies are making a fortune, right? You got to buy it. And it looks like that tide might be turning just a little bit, like, because this compute thing is going to go around the memory chips and do the same thing for, again, a much lower price. And, and you also have, we keep talking about it, but these data center things getting a lot, now it's starting to get in the hands of the people, right? Like down in Florida, where I am, there's a bill that may happen in the state of Florida where, like, you can only build in this area or something like that. Like, so the people are speaking, like they don't want it. They don't want the data centers. They don't want it. So all that stuff where guys are spending all this money on these data centers, what happens if they don't get built or
Maybe
they don't?
wait till the Democratic Socialists take over.
So
They're
fun
going to turn
little
those data centers into housing.
fun little data point. You mentioned Micron and the big run they've had, and even after the correction, the market cap's just under 1.3 trillion US dollars,
Yeah.
and it's headquartered in Boise, Idaho. Lovely place. Lovely place.
I've been.
Yeah, it's great. And that now makes it a larger company than any company headquartered in the state of New York.
Yeah.
So Idaho has a bigger champion than New York does, which is interesting.
Yeah. And it's amazing to me too, because like not that long ago, right? It wasn't that long ago where everybody was like, yeah, these chips, they're old.
It's like
this is
it's
like
Walmart.
.com.
It's
Yeah, this
Walmart.
is .com stuff.
Yeah.
Let's get AI. AI is and
Yeah.
people were just like, like SanDisk. I think their 52-week low was $40 the stock. 40. It hit like 2,300 last week. 52 weeks. Like it's nuts. And if you look at the stats, like some of the PEs, the price to earnings ratio, it's still not crazy because they're making hand over fist. But the con argument to that pro is this might be the time to shine for those guys, and then they'll go back to being boring again, and the next thing will come along.
Micron posted 85% gross margins.
Unbelievable.
85%. So
and how many
where do you
chips
go from there?
every day? Like it's just nuts.
How much cash they must be sitting on?
Oh my God.
Well, they just made $40 billion. That was their earnings, which is more than any of the Mag 7 posted.
Right.
So it just, again, this was a backwater company in Boise, not, Apple or Google or Meta, just crazy how
you can see it, right? You can see what Richie said about Apple. All right, guys, we've all had our fun. You had your big windfall. Now it's time to start doing business.
Yeah. We're not buying anymore until you make this price X.
Right.
And that'll be the new guy's job, right? That's why Tim Cook was like, okay, I've done enough here. Johnny, you take over and you handle the uncomfortable conversations. I'm going to go retire. So yeah, I mean, I think too they're almost like they become like meme stocks, like even though it's not trading at meme prices, right? Those are, I mean, Micron's at $1,100, right? So that's a lot of money per share. But I could see, I'm sure there are people out there that bought like SanDisk, and what was the other one? I think at one point, AMD, is that Lisa Su is the CEO, the woman? I think it is. I think AMD when she took over was $2. $2. Like it's just preposterous. Like this is like the craziest thing ever. I mean, remember how just not that long ago we were all talking about NVIDIA, right? Like NVIDIA this, NVIDIA that. That's like small time. That's like small potatoes compared to these guys. Small potatoes.
Just again, we constantly talk about that bowl of spaghetti looking diagram we have. Everybody's connected to everybody. And I mean, yeah, it's like, what about NVIDIA? Like, I mean, could you see a 20% drawdown on NVIDIA? Could all basically all these chip makers?
Yeah, why not? I mean, and they're, you can bet your bottom dollar that there are plenty of companies going after them, right? Mm-hmm. Like trying to compete with them on price. Same thing, right? Like maybe 75% of what NVIDIA can do, this company can do at 20% of the price. And people will try that, right? Just to see. Like, give me like a 6-month warranty on this thing, right? Like, let me just go there. And then it's in and it works. And you're like, okay, with NVIDIA, what? Yeah, no, don't. You guys are too expensive.
Right.
There's no moat. In other words, there's no moat.
No moat. No moat for Motorcycle Man.
No.
All right. How about SpaceX? So SpaceX has had an interesting week and a half.
Yeah. I mean, people were diving over each other to get it, right? To get the stock on the IPO day. And a couple of days later, they raised $34 billion in the debt market too. So it's
which was a big surprise. No one didn't tell anybody.
Thanks for the money on the IPO, but it wasn't really a lot. We need more. And we'll be floating out, as Kevin pointed out last week, we'll be floating out some more of our employees' stocks in the months to come, because there's only about 5% out there right now, and it'll turn to like 50 by the end of the year.
Now, people are scratching their head, right? Because they got an investment grade rating on that debt.
I know. It's like the magic Musk.
Right. Elon's got it. Don't worry about it.
Yeah, he's smart. He's very smart. He's
smart.
A billionaire. Not anymore.
Well, one of the things
he dropped down to a billionaire again.
One of the things very smart people do is they figure out all kinds of ways not to pay you what they owe you.
That was Buffett. Buffett was good at that. That's why he owned Geico.
Right.
Collect premiums. Oh, you got no car accident? Yeah, I have a lawyer too. We're not paying. but you keep spending, Joe Shit the Rag Man. You keep spending on your lawyer, and then one day you'll run out of money, and I win. That's how.
I'm folksy. I'm a
folksy guy. Like what was that? J.P. Morgan the slogan was first class business in a first class way. I think Warren had first class business any old way.
Oh, nice.
Yeah.
All right. Well, I think we've covered a lot of ground here, and
Yeah.
we have one
Eric,
positive.
I want to ask you a question because
Yes.
that also is a focal point, and you know lots about the Fed. Um, since Mr. Warsh has taken over since his first
FOMC.
press conference was on June 17th,
Hmm.
we've had some problems in the old stock market. So, and I saw where B of A claims they just put out the other day, the B of A analysts say 3 rate hikes by the end of 26. 3.
Yeah.
So, do you think he's still sticking to independent, or is old Don getting in his ear still?
Yeah, I mean, when you look at like I was looking at those Fed fund futures and the swaps that they're predicting now about a 13% chance of three hikes, like you just said. You know, I don't know. I mean, the latest the PCE numbers that's the Fed's favorite price consumption. It came out, I think, hotter than they thought it was going to come out, both the core and the headline number. And it all depends on. I know that he has said in the past that there's certain things you can look through. Like I can look if it's just energy, I can look through energy and be like, okay, but other than that, that's because that's going to sort itself out, and going more than one or two times. I would say he's a one time. He would probably prefer to go one time, and that's just my guess. I don't know what three hikes does for us, other than I just don't know what positive things it could do. But and everybody thinks that once energy prices come down, which again, oh, by the way, the war was over until it kind of wasn't yesterday, right?
Yeah.
Which is kind of what happens when people sign a treaty and they don't agree on what they signed, right?
Right.
Like Don saying, no, you said that the strait's going to be open and it's open for business. And Aaron's like, no, we said that we're still going to have control over the strait, and you still got to pay us, and you still got to, and they fired on a ship that was trying to sneak around and said, then we fired at Iran. So, good luck with that. That's why I'm buying more shell oil. That's gotten pummeled, and I'm also buying interest rates. Like, I mean, the market has treated this. The war is over, like over the skis. I mean, the 10-year Treasury rate is now 4.37. That's 30 basis points lower than where it was when we spiked up, probably in May. I think is when we hit the high. So, I mean, forget about AI spending. I mean, a lot is just riding on, Donald Trump and Iran agreeing on something, which I think we know if we did that on Kalshi or Poly market, there would be a pretty, the yes, no would probably be pretty skewed towards the no. So anyway, I guess to answer your question is, I think he would prefer to go once, but I mean, if these numbers still keep coming in hot, and I mean, we've had this for 5 years, 4 years now. We were in the 4 year inflation. The biggest worry with inflation I've always read is that it gets into the psyche, it gets into the mind that I better buy today because it's going to be going up, or hey, boss man, I need a raise because the cost and it just becomes a cycle. I think we're in that cycle, and the only way to break the cycle, unfortunately, is to do a Paul Volcker and just fucking just kill the economy. Just kill the economy, destroy aggregate demand. And that's the only real way you slay inflation once it has become ingrained into people's minds. So,
well, to be fair, we're in Volcker's time, it was in what, 18, 19% inflation, and we're 14, 15%. We're at 4%. So
Yeah, I think if they keep, I wonder if they'll keep quiet now, although the genie's out of the bottle, about the 2% thing. Like that's everybody's goal, right? That was everybody's. We have to have inflation at 2, and it's at 4 and change, and the trend is not our friend, right? It's going back up, it's creeping back up. So I wonder if he keeps a lid on that for a bit. But also, like if he does one, when's he going to do it? He going to drop an October bomb right before the midterms? I think Trump would
be
head
happy
on
about
to
that.
the Fed building for
Yeah,
that.
he's got a tough job. But look, I mean, even though we say, oh, it's 4%, well, Energy's a lot higher than 4%. Food's a lot higher than 4%.
Yeah.
Shelter's like, so the dissatisfaction with the economy and the fact that no matter what, it seems like wages are not keeping up anymore with steadily increasing courses. And again, it's 4%, but it keeps being 4% and a higher number, right? So
Yeah.
it's still going up.
And there was a good article in the Journal, I think, the Wall Street Journal, about like just holding a home these days versus 7 years ago, right? Forget about the sticker price. And then they were kind of like, and forget about mortgage rates, right? Okay, that's great. But like HOA fees, any kind of maintenance in your house, electricity, like that's what people care about, right? Like that's what's going out of their pockets. It's not like,
Also property tax
yes,
and home insurance.
Everything's going up.
and that's where people see it and they're like, damn, and you can't, I don't know how you fix that.
Well, that's it. Yeah. So will raising rates 3 times in 2026 cure that? Will it lower your car insurance or your home hazard insurance? No.
No, it'll crash the real estate market, I think.
Yeah.
And that maybe that's the way, right? New home buyers get a feel.
Yeah, I mean, we all have kids, and I know my kids. My son is like, I'm never. They already. We all already have accepted the fact we're not going to be buying a home anytime soon. They said the average first time home buyer now, the average age is 40.
Yeah.
Wow.
40. I think it used to be like 30 or 31. Not
It was
too
in the
long.
20. I think it was in the 20s back in like the
Yeah.
60s. I think it was like 28 years old.
Well,
Yeah,
now
demographics are different, but whatever.
now we're ending on a sad note. Kevin, do the Japanese retail buying of.
Yes.
And the saddest for me this weekend, after I think it was 132 years, the Big A closes down for good tomorrow. The
Oh,
Aqueduct Racetrack will be no more. So many big events, they renovated Belmont Park, which is supposed to look beautiful, but they're just bagging Aqueduct. They're going to keep it open till like Labor Day for like simulcasting. You can watch and bet, but no live
yeah.
horse racing anymore after Sunday. And I almost went up there. I thought about it really long and hard. So many good times there, and what a done. I mean, at one point it was very nice, but
It was an outdoor toilet.
oh my God! And they had like a little interview with some of the key people that are around now, like trainers, jockeys, whatever. And you could tell they like edited it or played it light. But then, like Linda Rice, who's a famous trainer, she's like, and the fans, they really give it to you when the horse loses that's supposed to win, and that shows how passionate they are. I've been around some of those people, and like I think she would like sometimes have to run to the trainer's room, like every name in the book, like unbelievable. And then the next race, of course, she wins, and like, yeah, Linda, you're the best.
That's Eddie New York. That's Eddie New York sports.
Yeah.
All right, guys. Good stuff.
All right.
See you next
All
week.
right. Big week.
Yeah. Good luck, everybody.